What's essentially being proposed by DC right now, if you go behind on your payments, the taxpayer will catch you up. And not only that, will help you by offsetting your actual mortgage payment with a reduced payment for 5 years. Folks, interesting news from HUD this past week shows there might be some major signs of serious cracking with mortgage delinquencies behind the scenes. Now, I have not been keeping a close eye, particularly on this mortgage segment, because honestly, I thought a lot less of it was being funded, but I was dead wrong. And I was also in shock at what I read in terms of the delinquency data on this particular mortgage segment, and it shouldn't be a surprise. When we consider any potential price correction, everybody's quick to say, hey, you know what? This time it's different. Mortgages are being written far differently than they were in 2008. And I got a surprise for you folks, because it is not the case. I would tell you on a week in, week out basis in my own inbox, I get offers from lenders of all types. I get no doc loan offers, which means you don't have to document your income, or light document income. Loan types where you prove very little. As long as you can fog a mirror and you have a decent credit score, you can still get financed. Multiple loan avenues where you can get 100% financing in the market right now. High risk credit, all that stuff is still being funded, and people sitting here saying this time it's different. Well, I got news for you folks. I looked at the most recent delinquency data, and when I saw the news of HUD and paired it with how badly these mortgages are in terms of how the shape they're in, of people just struggling to make their payments on time, this is incredible, and the story has to be told. So here's the situation. FHA is a loan product that most people almost synonymously call first-time home buyer loans. Now, it's not a first-time home buyer loan. You don't have to use it for the first time. You can actually buy it for your second or third home purchase or whatever. The reality is these types of purchases are used. 83% of the buyers using them are first-time home buyers. So that's why they get called that. But the other reality is you can borrow nearly 100% of a home's value to get one of these loans. You can have 580 credit scores in certain circumstances to get these loans. Besides the fact of low credit score, besides the fact that you can borrow nearly all the money. Now, folks, in a typical housing market, I'm saying one that's kind of healthy, balanced, normal most of the time, the way the market is, 1 out of 3 types of loans funded is going to be what's called an FHA loan. That means it's insured. The loss of the loan is insured by the federal government, or the taxpayer, because the government really just has our money. Now, the other thing about these loan types is how much money against your income you can actually borrow. You can literally become super house poor and qualify for government loans. Now, here's what I'm talking about. The average Florida income, for instance, is about $64,000 per household. So let's say $5,000 for easy math. You can qualify for nearly 57% of your income can be obligated to debt. You can get keys to a house. Here's quick math. On a $5,000 a month income, the person's housing debt, or housing debt plus car payments, debt combined, can go to nearly $3,000 of their income, $2,800 and change on the high end of what their debt ratios will accept for these loan products. Now, what that means is you have around $2,000 left in household, $500 a week to cover everything else in life. Now, you got to understand, in Florida, housing costs are massively variable. This particular year, I've heard stories of folks that had a $3,000 a year insurance policy, $300 to $400 a month, for instance, that tripled on them, going to $800 to $900 per month in the state of Florida because insurance is out of control. HOAs are out of control in Florida. The costs are variable. They're adjusting. Not to mention the fact that most people's grocery bills are up like 50% on a weekly basis. Add to that, we have the Saudis now cutting back on gas, and all of a sudden, let's say that fuel is $4 a gallon again, or $5, or who knows where it's going to go. All that, and you have very little disposable income left to feed your family. Now, when these loans are cutting it so close, when you have borrowers that are new to the game, when you have borrowers getting financed at nearly 100% with 580 FICO score or 600 FICO score, these folks come into trouble really fast. They find that they don't have the money to deal with the house, and then they fall into trouble. Now through the pandemic, all loan types had massive delinquency overnight, and a lot of that came down to rest. Now, one thing you need to consider is FHA, the loan product that is in question, that HUD is now asking, should we have all the taxpayers just bail these folks out? It represents the highest default category of any loan type. I didn't know how bad it was. I actually just looked today. CoreLogic has the most recent data I could find, which was October of last year, 2022, is the time I'm shooting this video. Most recent data showing that FHA loan products, nearly 5% of those loans are in delinquency, folks. That is a big number. Now, I'll give you comparison. Conventional loans, which is the non-FHA government insured type, Conventional loans, less than 1% of those loans are in default. You have over 500% higher delinquency rate in the FHA category, which is why when we come to this news story where you see HUD now going and saying, last week we're proposing and we want feedback for the idea that all these delinquency loans that are in trouble, as they're coming up, we just use some of this taxpayer insurance money to go ahead, throw it at these folks so that it catches their mortgage up. And then we'll just create some kind of a discount for their mortgages for 5 years' time. And then we hope the economy is not smaller. We hope these people that bought these houses can actually afford that big payment that they signed up for when their income back then was max inflation with everything else. We hope none of those things have changed and that none of these things are actually going to send these houses to foreclosure in the meantime. The reality is the reason why HUD is proposing this is because you all might remember last year, they came up with Band-Aid number one, okay? And they came up with that first Band-Aid because as far as I can tell, FHA delinquency is crazy high. It's dangerously high, and it could result in a tipping of a lot of real estate being in bad shape, coming to the market, REOs, the whole bit. But here's the deal. The last year's idea, what HUD actually got produced into the market was the idea of a 40-year loan product. Now, a lot of people and influencers came on YouTube and said, hey, FHA is giving out people a 40-year loan. You can go qualify. This was for people who had loans who fell into trouble. So what would happen is you now can't afford your loan. You're going into trouble, which is obviously a huge class of these borrowers. They call in, and what happens is last year, when they proposed this, March of 2022, April of 2022, last year, you could call in and say, I'm in trouble. And they would say, oh, no problem. We'll give you a 480-month loan term. Okay. So let's say you only have 20 years left to pay your loan off. Okay. Or 25 years to pay your loan off. And you've been paying on this. Now you're in trouble. They go, we're going to tack on 15 or 20 more years to your new loan. And then you're going to go on to today's mortgage rate. Okay. Well, when they came up and conceived and brought this idea to the market, the interest rate for FHA was like 4.3%. Now the interest rate for FHA is floating towards 7%. And they're saying, wow, even if we give these people months and months and years more debt, it still doesn't give them enough payments to reduce their payment enough to keep them in the house. So essentially the 40-year has gone flat, folks. The next idea is let's just stroke a check. Let's just cover it all. And honestly, folks, what you really want to look at all this. I mean, the idea is a lot of folks are just going to hear this on its face and be purely upset. You're like, how in the world can someone just go bad on a loan and we're like Section 8ing their mortgage, right? Because essentially like you're just dropping below the market rate of their payment and subsidizing out of taxpayer money. So it's like, that is frustrating for people just to hear that on its own. But folks, beyond that, folks, listen to this. I would love to see FHA delinquency data through today. I would love to see it because I have a feeling that inflation has gotten so bad, right? The general cost, shelter, services, despite the Fed's best efforts of jacking up interest rates, and they're going to be jacking them up higher. People in these situations can't refinance out of these problems, okay? So you, in all likelihood, have people sheltering in place, falling behind their payments, driving the delinquency rates up even higher behind the scenes, and possibly have the scenario where people are just either going to be selling their home or in a forced sale situation, particularly because we got the Fed predicting that we're going into a much bigger recession cycle towards the end of this year. The Federal Reserve on their own is saying unemployment's probably getting closer to 4.5%. It's going to be much higher than it is now. And right now we're going through this heyday of everybody feeling like jobs are tight and jobs are there and they're plentiful. But there's a huge sector of people that are still being laid off, particularly through technology, through real estate, through other different categories of the marketplace that are seeing layoffs and are seeing troubles. And the Fed is predicting that to get worse. In all likelihood, folks, interest rates are going higher. We're going to have higher interest rates than we are now, making this problem even worse, making the problem for real estate even worse. This is the problem, folks. Recession drives people to have to sell their homes. Thanks for watching this video. I'm super grateful. Do me a favor, smash the like button and leave a comment. Tell me you love the video, you hate the video. Give me an idea of what you think is up next for housing. Do you believe that there is serious housing problems ahead? Or do you believe this time it is different? I want to hear from you either way. Let's continue the discussion in the comments, but thanks for watching. And if you want more great insights on the Florida market and real estate market in general, subscribe to the channel, smash the bell icon so you don't miss a single video, and we'll talk to you in the next one.